We are live, and I wanted to welcome everyone to our event this morning. I am Lucia Jennings. I'm the president of the Brazilian American Chamber of Commerce of the Southeast. And I wanted to start to let everyone know that we are recording this event and reminding everyone that your microphones will be mute during the time of the event. Any questions that you have, you may want to ask our panelists, you please write them down in the QA chat, and someone is monitoring the chat and we will ask questions on your behalf. We are delighted that you could join us today for this webinar about financial inclusion and how fintech and open banking are shaping financial services in the US and Brazil. It is a great pleasure to host this event in partnership with the Federal Reserve Bank of Atlanta. Our special thanks goes to Stephen Kay, Lolly Schaefer, and Jessica Washington for working with us in organizing this event. Thanks to Carlos Zambentor, co-founder and CEO of Athens Brazil, Bank in Brazil, and then Ken, who leads the Global Open Finance at Plaid, and our moderator, Rodrigo Dantas at EY, America's Payments Leader, for getting together and wanting to share your knowledge and insights about financial inclusion. Thanks also for the great support of the Consulate of Brazil in Atlanta. We value this partnership very much. Before I pass on to Jessica Washington for her opening remarks, I want to take a few minutes to tell you about the Brazilian American Chamber of Commerce. We are a nonprofit membership organization whose mission is to foster business and trade between Brazil and the US. We work with three pillars: providing information to our customers, making connection in our business community, and giving support to our members to expand their business. In order to continue to serve our customers, we invite you to become a member of BACC, and I will put more information about joining BACC in the chat in a little while. Now I would like to invite Jessica Washington, who is payment risk expert with the Federal Reserve Bank of Atlanta Retail Payments Risk Forum, to give the audience a welcome remarks on behalf of the Fed. Jessica?
Hello and welcome. Thank you to the Brazil American Chamber of Commerce for hosting the event today. And thank you all of you for taking the time to participate in this very important discussion. I also have a special thanks to Stephen Kay, my colleague, who heads up the Americas Center at the Atlanta Fed. The Americas Center is a research center that really works to understand and collaborate with Latin American partners. And also special thanks to Lucia with the Brazil American Chamber of Commerce. And through Stephen and Lucia's partnership and dedication to partnership is really how this event came together today. In 2019, I had the pleasure of meeting Lucia and first working with the Chamber as we put together with a lot of the panelists that are here today and the group that worked on this project today. We held a live event in September, which was a great success, but I imagine a lot of audience members today were also present at that time, but hopefully we have even an expanded audience geographically with the benefits of being virtual today. So that's when I realized that there's really synergies and parallels in our pursuit of economic inclusion, as well as really making sure that we empower customers to have options. And since our missions align in such a way, we really see that there's continued opportunities for collaboration. And so that's, again, how we've continued to work towards topics like today. And I think I'll highlight three benefits I see coming from this event put together today. First, there's there's a focused agenda, which is really nice to have. Sometimes there can be too general topics, but we're able to dive in today to open banking and how fintechs can ultimately expand financial inclusion. We're able to look at it what is being done now and how we can continue to innovate and making sure that these innovative technologies offer benefits to all, as well as are accessible to all and are usable to all. So I'm glad that we have that focused agenda today. We also want to make sure that we keep the economy open for everyone. So we realize that technology sometimes has barriers to adoption. And we want to ensure that we continue to consider those that are unbanked, those that are cash-based, and those that are in vulnerable populations. The second benefit I see today is the diversity in our panelists and the deep expertise each of you have that I've learned through our meetings along the way, and just the unique experience brought today. I believe that it gives the issue a 360 view, if you will. So I think that this really gives us the opportunity to see, the details of innovation that work, as well as opportunities for improvement. And third, engaging in partnerships. We have so many partners in the audience today, and some that we hope to develop and engage with either during the session today or after. I think that this opportunity to work together with the diversity and stakeholders lets us continue to learn. We have at the Atlanta Fed a focus on learning from our FinTech partners, as well as other geographics that have maybe had a different path to financial inclusion than we have. So ultimately, we are very excited to partner with a diverse group and panelists and audience that is here today. And so I thank you all for putting together this discussion, and hope that everyone enjoys it. And I'll be heading up some of the questions at the end of the session. So thank you again. Lucia?
Well, thank you, Jessica, and thank you so much to sharing with us why it is important for the Fed financial inclusion. And I'm excited for the event. So now I wanted to take this opportunity to introduce our Ambassador Carlos Henrique de Abreu. He is the Consul General of Brazil in Atlanta, and just happens to be a good friend of ours. He has been a career diplomat since 1983. He has been the Consul General of Brazil in Atlanta since December of 2018. Before coming to Atlanta, he was assigned as Consul General in Sydney, Australia. His assignments abroad include the roles of Deputy Chief of Mission and earlier Economic Assistant to the Embassy of Brazil in Washington, and other opportunities took him to the embassies in La Paz, Buenos Aires, and the Consulate of Brazil in San Francisco. From 1995-96, he was a special advisor to the Minister of Finance in Brazil, and he also held other positions at the Ministry of External Relations, which included Director of the Department of the United States, Canada, in Inter-American Affairs. He was the head of the Division of Market Access and WTO Doha. And of course, there is other roles that he has taken place as advisors in many departments within the ministry. Lastly, Ambassador Abreu published 2 articles for the Economic Magazine of the Mission about Argentina, one on Argentina's prosperity during the gold standard and the ideology of dollarization, and the other about Argentina from convertibility to default. So let's give a warm welcome to Ambassador Carlos Henrique de Abreu.
Well, good morning, everyone. Thank you, Lucia. You're the nicest MC I've ever known. Thank you for your friendship and kind words and introduction. Well, as always, it is a great pleasure for me to join an event organized by the Brazilian American Chamber of Commerce of the Southeast, this time in partnership with the Federal Reserve Bank of Atlanta. Through Lucia Jennings and Stephen Kay, I would like to express my gratitude to the organizers for inviting me to make some introductory remarks, as well as to congratulate them on such a relevant and timely initiative whose theme, FinTech and Open Banking. I will try to be brief as I'm standing on the way between an eager audience and such a high level and distinguished group of panelists. and moderator, Rodrigo Dantas. Well, ladies and gentlemen, let me say first a word about Brazil and Brazil-US relations. Brazil has the largest economy in Latin America and will possibly be one of the first major economies of the region to return to its pre-pandemic GDP levels, hopefully by the end of 2021 or the beginning of 2022. Brazil expected to grow by between 3.5 and 4% in 2021. However, we're living such a sobering and humbling juncture that we can only mourn for our many deaths caused by the COVID-19. We are in a horrific war against a deadly virus, and we'll only win it through massive vaccination, and nobody and no nation can be left behind. Well, Brazil, US have a 200-year-old bilateral partnership with close cooperation in all areas, including the fight against health crises such as the present pandemic. Brazil-US relations have common values and interests as their main engines, and the best is yet to come in our relationship, particularly in the area of trade and investment, which is a very dynamic, but still has a huge untapped potential. Our relations, for instance, still lack important bilateral mechanisms, indeed highly supported by the private sector, such as a comprehensive free trade agreement and a treaty to avoid double taxation. Anyhow, the United States is by far our largest source of investment. It's second only to China in trade and continues to be the largest market for Brazilian manufactured goods, mostly in intra-company transactions. On the other hand, in the last 10 years, Brazilian investment in the US has increased fourfold. At present, just in the 5 states under my jurisdiction, Alabama, Georgia, Mississippi, South Carolina, and Tennessee, there are more than 40 Brazilian companies investing and creating jobs in almost all sectors as a reflection of Brazil's diversified economic and trade profile. If these 5 states of the Southeast theoretically constituted an independent country, they would be together our 11th, I repeat, largest trading partner, right between France and Canada. Ladies and gentlemen, I'm confident that Brazil-US cooperation in fintech will continue to flourish and gain traction, a sector that plays such a key role in enabling social inclusion and economic growth and job creation. Just to give you an idea of what's happening on the ground, 60% of all American venture capital that flow into Latin America have Brazil as final destination, and a large portion of which goes to fintech. Indeed, São Paulo has become an important fintech hub in the world, with other Brazilian states following suit. And Brazil is already home of 17 unicorns, which is a remarkable achievement. In order to understand the reason of Brazil's success in this field, we need to have in mind the big picture, or perhaps as Jessica Washington would say, the 360 view. Since June of 2002, the Brazilian payment system has been connecting all financial institutions at national level and promoted intraday real-time settlement of transactions. And I will say it again, since June of 2002, all financial institutions in the entire Brazil, a country larger than continental USA, are being settled by online real-time transaction, having customers the ability to perform real-time bank transfers as well. Moreover, in 2013, the Central Bank of Brazil issued a regulation fostering competition in the credit and debit cards merchant acquiring business, prohibiting the exclusive setup that every major card brand had with its own acquirer until then, promoting a significant distribution of value back to the merchants in the value chain and opening the business to new entrants. In 2017, the regulatory framework for the fintech industry was issued. And since then, Brazil has become one of the most active players in the sector worldwide. In 2020, the Central Bank of Brazil launched the National Instant Payments Rail called PIX, P-I-X, with tremendous success. And I'm sure you will hear more about it today. Last but not least, this year, Brazil is implementing its open banking framework in a 4-phased approach, all expected to be completed until the end of this year, 2020, enabling an even more competitive, creative, and inclusive financial service sector. As you know, part of the Brazilian population still does not have appropriate access to financial services and banking, which constitutes a challenge and at the same time, an opportunity for investment and economic growth with social inclusion. I look forward to the panel ahead very much, as I see it as a unique opportunity to showcase such a strength and asset of Brazil in today's world. Thank you.
Thank you, Ambassador. Great pleasure having you here with us today. And thank you so much for the overview of Brazilian fintech and banking industry. Now I would like to introduce the moderator, that's Rodrigo Dantas, and Rodrigo is the EY, America's payment leader with more than 25 years of experience in financial services, fintech, and management consulting, leading diverse teams in highly competitive environments. He is a strong diplomatic negotiator, fluent in English, Spanish, and Portuguese with an international mindset and high level of creativity. He has a record of success in building and running businesses and consulting practices. You can check Rodrigo's extended bio by visiting his LinkedIn page. But as of now, I would like to hand over the microphone to Rodrigo, and please lead the show. Thank you.
Thank you, Lucia, and thank you all for the open. Thank you everyone for being here, and I'll do the same trick. So I'll shorten the bios of the panelists, and I incentivize you all to go to the LinkedIn pages and connect with all of them. They're fantastic people, obviously, and worth the connection, definitely. But let's go ahead and welcome Dan Kan. Dan leads Global Open Finance at Plaid, a data network powering the digital financial ecosystem. Previously, Dan led the company's bank integrations team, managing product integrations and data access agreements with financial institutions across multiple markets. Prior to joining Plaid, Dan worked in Capital One's digital partnership business, was a management consultant at Boston at BCG, no one is perfect, and one on financial inclusion topics in Latin America. So Dan, welcome to the panel. Thanks for being here, man.
Thanks for having me, Rodrigo.
Of course. Again, connect with this guy. He's amazing. Let's go to the next panelist. Let's welcome Lolly Shaffer. We already talked about her a lot, but it's going to be worth it to listen to this. So Lolly is a senior financial specialist in the supervision, regulation, and credit division at the Federal Reserve Bank of Atlanta. She is responsible for analyzing trends and emerging risks in the banking industry and the economy. She currently manages several projects, including large-scale initiatives focusing on financial technology, fintech, and safer payments innovation. Other initiatives include education and advocacy of emerging technology to assist examiners in supervising firms. Her work spans the Federal Reserve System and the Federal Reserve Bank of Atlanta. So I have another entire paragraph here to read, but I'll keep short, and I'll incentivize you all to connect with Lolly's right away. So there's a lot to learn from this lady. Lolly, thank you for being here, and welcome to the panel.
Thank you, Rodrigo.
And lastly, but not least, I'd like you all to welcome Carlos Zanvettor. So Mr. Zanvettor is co-founder and CEO of Afinsbank in Brazil, bringing more than 20 years of proven executive and management track record in retail banking, asset and wealth management to the Afins open platform. Afins leverages from Zanvetor's background and industry acumen to deliver a combination of financial and digital services to the local mass market in Brazil, and to embrace digital financial inclusion to promote economic freedom and create value for its shareholders. There's a lot more history on this guy's career. I also incentivize you all to connect with him on LinkedIn. You'll see how much experience there is there. I have another entire paragraph that I want to read. Welcome, Zanvetor. Welcome, Carlos. Thanks for being here.
Thanks, my good friend. It's an honor to participate in this exciting event today.
So I'll go right in and I'll keep the dialogue with you and talking about Afins for us to get started. So if we go to Afins website and understand a little bit of your business model, Afins, and I read that portion of the question, Afins says that you are focused on the reality of Brazil, where small and medium enterprise account for 98% of the arena, employ 60% of the workforce, and deliver 40% of the GDP. The lower economic classes correspond to 45 million people, the vast majority living away from the 50 largest cities and are either underbanked or totally unbanked. So to many in the world, this sort of description is exactly the target segment for financial inclusion. So could you explain to us why have you chosen this target segment and what are the key characteristics of your success, of your business model?
Yeah, sure. It's actually the combination of factors. Some of them you already mentioned and the Ambassador Carlos already mentioned. But first of all, we need to highlight the informal jobs account for over 40% of the Brazilian workforce. Our society and the government work deliberately to embrace and transform our large informal economy and promote inclusion at the end of the day. Education as a whole, not just financial, is the game changer, is the goal. And success must be measured by gains of productivity and GDP in the upcoming years. Over 2/3 of the 45 million people you just mentioned now have internet access in the country and own smartphones, which is a big change. It's the result of successful privatization of the telco sector in the country in a process that continues to evolve. Secondly, the ambassador spoke about the financial system in Brazil. After fixing the hyperinflation and strengthening the banking system, which is a process that lasts over 20 years, starting in the early 90s, Brazil ended up with a fairly consolidated banking system. In the last few years, the Brazilian Central Bank induced the development of fintechs. And now, as mentioned before, we see several of them growing big, becoming unicorns, and even beyond that. Some of them are already listed at NASDAQ to fund further growth in the region, and some of them are already going international as well. So the point is, only a few of these fintechs truly address the large unbanked and underbanked segments in the country at this moment, as we do. For us at Afins, financial inclusion in this context is a profitable and durable business because we've been doing that for over 20 years. If you look at Afins inside, we are the upgrade strategy of a legacy company, which was an innovative consumer lending company that started in the early 90s, lending money to the unbanked. And pretty much for these people, their first credit card, their first store credit card was actually a good replacement of a bank account. So, we've been doing that for over 3 decades at this moment. And just recently, we rebranded the company. We introduced new management team, and we upgraded the strategy to become this potential fintech that we present here today. So that you have an idea, the combination of this important legacy gives us the ability to now process over 3 million credit applications per year, from which we approve 25 to 30% and underwrite credit, which is a large scale operation already. But lending is just what we did for many years. It's just one product. And from there, we're starting the full bancarization of these applicants. For us, it's a track record. For many other players, it's a challenge because lending to the unbanked, to the informal economy, to the informal jobs is truly a challenge. From day one, we also adopt an open architecture model in all dimensions of the company: business, technology, distribution, and alliances. Initially, this business model gave us the ability to expand the lineup of products, because the idea is to go from a monoliner to a full digital bank. And through that, we joint venture with a few selected startups, like an accelerator, which are expanding our offering very, very fast. And that's that's pretty much the leverage we use to kick off our innovation cycle. We also invest on our own cloud-based payments technology, connect to the instant payment PIX presented before here today. We also invest in data modeling, both structured data, non-structured data, because we believe it's essential to manage growth and capital requirements to manage this information very carefully in the unbanked segment. So, I'm sorry.
No. That's great. I'll like you to talk about PIX a little bit later today still.
Okay.
But I'll ask Dan to weigh in here, because you mentioned a couple of things that many things are important, but you mentioned specifically the concept of the open architecture that is very familiar to Plaid business model. And also Dan specifically has some personal experiences with financial inclusion in other geographies and other countries as well. Dan, would you comment a little bit on what you have seen in other countries and other geographies about the open architecture, open banking concepts, and that would be some successful characteristics that would be potentially common to this, providing and fostering financial inclusion as well? Do you think are important?
Absolutely. So I mean, I think open, whether it comes to architecture or open finance, which sometimes can fall under the umbrella of open data, is incredibly important for the topics Carlos is talking about, which is financial inclusion. Whether we're talking about Brazil or the United States, there's a substantial unbanked or underbanked population. That doesn't mean that they don't have financial activity. It doesn't mean that they're not doing things in the economy. What it means is that those activities in general are not being recorded. And to the extent that they're doing things like making payments on time, paying their water, their gas bill, their rent, all of these things are not being captured by traditional credit underwriting metrics. And so when I think about the potential for open finance to influence financial inclusion, it really is about lighting up more of those data sources. There's obviously a large movement from cash to digital, especially during the COVID-19 experience over the last kind of 12 to 15 months. But I think the idea would be to have more well-qualified applicants qualify for credit, to tailor products and services, as Carlos mentioned, for other segments like bank accounts and investment accounts and things like that, to the needs of people who traditionally have been underserved by the formal financial sector.
Very interesting, and you raise a point that. As the ambassador had mentioned on his opening remarks, so financial inclusion has been a theme in emerging markets that's been out there for many, many years. More recently, it's also has become mainstream in central economies. And while I was preparing for this moderating this panel, I was really impressed with the amount of publications and studies available in the US. And Lolly, especially in the Federal Reserve Bank of Atlanta. I mean, it is amazing how many publications, interviews, by many of the high quality researchers and members of the Fed, you can see there about financial inclusion. So I'd like to ask you to weigh in on this and share with us a little bit of what's the Federal Reserve Bank of Atlanta doing in terms of financial inclusion, and what do you see are the strengths of the actions that are being put in place, and the areas of opportunities as well.
Yes, thank you so much. It is an honor to be here today. There's so much value to be had here sharing with each other. And before I begin, I need to get a little disclosure out of the way. The views expressed here are mine and do not necessarily represent the Federal Reserve Bank of Atlanta or system. But for Atlanta, we do have two priorities that are focused on this financial inclusion. The first is our economic mobility and resilience priority, where we are focused on helping people reach their potential financially The second is our Promoting Safer Payments Innovation priority. Last year, the two teams collaborated on research that led to the creation of a Payments Inclusion Committee. And this committee was recently announced via a press release last week, and our members have been chosen because of their expertise, and we will be challenging our members to come up with options to our problem statement of how to better connect underserved populations to the financial services industry. And right now, all options are on the table, so we're excited for that work. To your second question on strengths, the strengths of this are that by convening a group of public and private sector organizations, we now have major industry players that will not only identify challenges, but also create possible solutions as well. And to the third question of opportunities, as we conduct outreach such as this with the industry, we will no doubt uncover more opportunities. However, we have another mechanism to unearth additional items, as we also have a focus of payments integrity. We plan to stand up a payments integrity hub where we are researching topics such as how to reduce fraud and mitigate risk in the digital space.
All right. I think you broke up a little bit in the end, but I think we were able to get okay. Yeah, I think you're back, but we were able to get the preoccupation on fraud and mitigating risks. But I see you're back regularly now. I'd like to double down, and that can be still with you or Jessica, if you are on, Jessica, as well, but just as a backup in case we lose Lolly. But why I have you and the regulatory topic on mind, still, reading through the research and the discussions being conducted, they naturally channel through the actions in terms of the existing setup of the banking system and the community banking as the major focus of many of the actions for fostering financial inclusion and other elements as well. But I'd like to get your thoughts and on the open banking opportunity for fostering financial inclusion and your views on the U.S. regulation towards open banking. What's your perspectives on that, and how you see that as being a potential element for fostering a more active component for financial inclusion through open banking?
Yes. Do I sound better now? Maybe I should.
Yes.
Should I turn off my video, Rodrigo? It's okay. Okay.
You're
Feel free
perfect.
to stop me so I can. Yeah, I can back up if I need to.
You're perfect.
Okay. Yes, as far as open banking, I wanted to share an analogy. So my father made me get a license to drive his boat when I was younger so that he could take a break when we took the family out on the water. And from boating, I learned two things. The larger the boat and the more items in your lane, such as other boats and swimmers, the more challenging it was to navigate. So this is how I see the United States system. We have thousands of banks, numerous regulating entities, and this makes the United States an extremely challenging ship to steer. So my opinion, though, is that regulators have realized the importance of innovation like open banking, and the current landscape is one that's being driven forward by forward-thinking companies such as the peers on this panel, who are creating solutions that are customer-focused. Furthermore, we acknowledge that our local community and regional banks need to stay competitive, so they should choose options that best align with their strategy. There are also many large banks that have created APIs themselves and even offer them as a service to others. The bottom line is that we do encourage safe innovation with a focus on consumer rights and data security. And I'm glad to see that most of the regulators are reaching out to the industry in order to gather input to shape their own initiatives as well. And as far as the impact, we are all here today because we do acknowledge the benefits of open banking, such as bringing these underserved populations into the financial services arena. As Dan mentioned, we are allowing them to now unlock a whole world of tools, such as access to credit, new products and services, to better manage finances, but also to help them economically, which is why we have our economic mobility priority. Economic mobility is the ability to elevate one's household to a better overall economic situation. And elaborating on when I spoke about access to credit, it is also about approval to get that credit. Dan mentioned this as well. So to get that credit along with a reasonable rate. So open banking allows those that are underwriting loans to look at a more holistic and also realistic view of the borrower, not just a credit score. So this does have potential to help everyone.
That's a fantastic answer, and that's you know, that's almost a call for me to ask Dan to weigh in. You know, Dan, hey, what's your view on these comments? I mean, when there's this ask for the industry to participate in the dialogue, and what's your perspective on some potential dialogues with other regulators in other countries? I mean, what are some potential benchmarks to bring into the discussion?
So, I mean, engagement is incredibly important, and thank you, Lolly, for those comments. As you said, the US, we have a lot of different regulators. We're constantly, especially with our policy team in DC, engaging with the federal banking regulators like the Fed, the OCC, the CFPB, but there's also a whole host of state regulators. And as you start to get into different products beyond just banking, it's a big challenge for private sector companies to engage, but it's one that's worth undertaking. I think when you look at it compared to some of the markets that are more regulated that Plaid operates in, like the United Kingdom, where we're, you know, a regulated entity under the supervision of the FCA, what's happening is actually that, like, while the regulation and technical standards are being implemented faster in some of the European countries, there's actually more implementation. So I sometimes, you know, steal this from our head of the UK, that the UK is 5 years ahead on regulation, but the US is 5 years ahead on deployment, right? So we're actually seeing it right now where the conversation is going broader than just open banking to open finance. There's companies besides Plaid, there's 4 or 5 new startups that are focused on unlocking employment and employer data that really shows who you are, where you work, what your regular paycheck looks like. And this is incredibly important beyond just banking and lending context, because every day people, hundreds of thousands of people in the United States are applying for things like a lease agreement, and they have to show their employment and verify it. And today that's happening over like paper statements. It's insecure. Sometimes it's a challenge for people who don't have like a printer or good access to technology to just even have access to that data. So there's many opportunities beyond just open banking, narrowly defined on payments and banking use cases. And if we look broader internationally, I think, you know, what's happening in Brazil is incredibly exciting. There's other countries in LATAM that have started to go down the path of writing these regulations. But from a principal perspective, I think the interesting one to look at is actually Australia, because they've just said consumers have a broad data right. And that means that consumers own their data for pretty much every product that generates that like data exhaust. And eventually companies, you know, going back to the open architecture point, will have to make that accessible to the end user and their representatives, because that's who ultimately should benefit. It shouldn't be something that's completely locked up within the companies and they're the only ones that can benefit from this data.
Very interesting bringing the Australian experience to the discussion here. It's usually a country that sometimes we take it for granted, but there are very interesting experiences from them as well. I like Carlos. Bring to us a little bit of the experience from Brazil. I mean, that there was also a joint effort from the industry and the regulator on shaping the regulation that's out there right now. So what can you share with us about it and how it's been impacting the landscape? You have to unmute yourself. You're on mute.
Okay, thank you.
Yeah.
The regulation is definitely a strong enabling factor for what's happening in Brazil, for the revolution that is happening in Brazil, including the consumer protection data law just recently regulated, that is not limited to the financial system, but to all companies, and in a similar process that Dan mentioned in Australia. So we're going through the process of adapting to all this new regulation. And without that, you know, I would say that we wouldn't be in the sweet spot position where we are right now. You know, Brazil is on the verge. Brazil is a very special case where not just regulation, but the entire society is pushing for this big change, for the democratization of services in general, financial inclusion, education in general. So, you know, what I can emphasize here is that our own case is, especially in the last 10 years, is a good example of what you can do organically. We grew our company from our own proprietary capital, which is the source of it is the profits we generate. And through that process in the last 10 years, being innovative towards the regulation, we deployed 5 new financial licenses in Brazil: merchants acquiring, banking, even our own card scheme with our own logo brand was launched in the process. And so, you know, I can definitely reassure that without that full process of improving regulation, being diligent with deployment, we couldn't be at the point where you are today with this great potential just ahead of us.
That's thank you for bringing that. I'd like to explore now the angle of the payments discussion, and then you brought it up a little bit. Others brought it up, but you brought it up late in your latter part of your previous topic. I personally believe that it is through payments that the traditional the borders of the traditional financial service system are being blurred today. And there's a strong connection between payments and everything else that we are talking about right now: financial inclusion, open banking, and everything else. So I'd like to get your perspective then. And Plaid naturally was potentially one, or if not the most talked about it, one of the most talked about themes in the financial service industry last year, because of a big payments initiative that happened in the market. So I'd like to get your thoughts about this. I mean, how the payments agenda mingles with everything else, and what's your thoughts about that? What are the potential hurdles, barriers, who are going to be the winners, how that plays into the development of this agenda for the future?
Yeah, I mean, we're incredibly supportive of modernization of the payment rails, but I think going back to Lolly's point about how complex the US financial ecosystem is, usually layers are built on top of the previous layers of the payment system. So Plaid, one of the reasons we've been able to grow is not because we developed a new payment rail, it's because we basically are a data layer that sits on top of, you know, a traditional and somewhat old at this point technology called ACH, which, you know, is not necessarily state of the art, but it's very durable. Over $40 trillion moves each year in the US on ACH payment rails. If we look to countries like Brazil that have modernized the payment system and have real-time instant payments, I think it does unlock a lot of stuff. And so maybe I'll leave it to Lolly to talk a little bit more about initiatives on that front. And then we can go a level deeper if we want to.
Go ahead, Lolly. The call is made.
Oh, wow. Okay. So I did want to hear his thoughts on FedNow, but as far as what FedNow has for this point and moving on, that is something the Federal Reserve is working on currently. And right now we're obtaining feedback from the industry. We have over 1,000 members in our FedNow community, and then over 100 participants in a pilot group. In March, the Federal Reserve released a message, specifications, release. So it's the FedNow standard set by the International Organization for Standardization, or ISO. The specifications define the message flows and formats that the service will leverage. So this is an important step because it allows financial institutions and other payments providers to start preparing their systems and developing solutions to support FedNow payments. I'll pause there because I did want to get Dan's thoughts on FedNow as a practitioner before I change topics.
And that's the thing that I was alluding to. Sorry if you wanted me to talk about it first. I think like when you look at the US payment system, there are, as you mentioned, some large banks that have taken initiatives on this front, and we work with a lot of them. We've recently just announced partnerships with US Bank. We've previously announced Chase and Wells Fargo. And it's great that there are real-time payment initiatives happening at those large financial institutions. But a very large segment of the American population actually banks at community financial institutions, at credit unions, and just smaller entities that are more likely to be hooked in directly to the Fed rails. And the Fed rails for payments are pretty extensive, whether it's on ACH or wire payments. And so something like FedNow being lit up across all of those, 5,000 plus regulated banks, and I think it's like 4,000 plus credit unions at this point, plus the potential to maybe open the rails to additional participants under some risk criteria, which is something that we have seen in the UK, which is that some non-bank entities can get access to the payment rails, is something that we're really excited to see shake out. It's going to be a couple of years to actually build all of this and then to deploy it and to write the rules. But we're tracking it really closely. And of course, a lot of our largest customers operate in the payment space, whether it's P2P, international remittances, or just moving money to do like funding of new accounts. And so those are all use cases where real-time could be a major benefit.
Yeah, I know I'm only a moderator here, but I am so excited about FedNow and how many products this can unleash on the top of this rail. I think that this is transformative. And Carlos, I do want you to weigh in on the recent experience of the instant payments scheme, the Pix in Brazil, because I think there's already, it's 7 months in, but there's already a lot of information about it. So please share that experience with us.
Yes, it's 7 months after launch at this moment. And so that you have an idea, the volume processed by Pix today in Brazil is as large as the entire card system in the country, which took 50 years to be developed. So, but still there's a lot more to come because at this moment, Pix has been has had a strong impact on replacing the online transfer system of Brazil, the local ACH system of Brazil, which has been set up 20 years ago, as we spoke before. So that upgrade of the ACH traditional system to Pix is already in place, and it takes all this volume that I mentioned just before. However, at the point of sale, at the retail, at the B2C, small retail, Pix is still accounting for 5 to 6% of the transactions because systems need to be adjusted. Merchant acquirers, retailers need to build the interfaces, which is a process. It's an ongoing process which I expect to mature within 12 months. But even at this stage, it already accounts for 5 to 6% of the retail transaction, B2C, in the country, with a great potential to replace cash, to replace money transfer systems that support the e-commerce retailers in Brazil still. And that should happen pretty fast because Pix was conceived to be efficient, to be safe, and without the need to set interchange fees. So the cost of a transaction is nearly the same that you find in other platforms around the world of nearly 1 cent of a dollar. So that makes Pix very attractive to optimize the transactional cost that's still high in Brazil. On the other hand, the central bank is making additional moves to induce B2B transactions to pump volumes into the Pix system. For instance, we're about to deploy marketplaces regulated by the central bank that will make available to fund providers assets to be prepaid, such as credit card receivables and trade bills in the B2B environment. All of that will be a lot more functional when the money is transferred in a real-time settlement scheme. So, I can only say that Pix is already huge in Brazil, and it's grow bigger very fast in the upcoming months.
Fantastic. Thanks for sharing that. So I think we now have time for some questions from the audience. And Jessica, I'd like to get your help with that here, and please weigh in. I know you've been monitoring the chat and the Q&A, and we also got some questions directly through LinkedIn and other platforms even before the panel started. So I hand it over to you to navigate us through some questions from the audience, please.
Will do. Okay, so the first question is for Affinis. There's actually 2 questions I'm going to put together, and that is, are you planning to launch in the US? And also, are you planning to explore FX licensing in order to offer exchange and remittance services in Brazil? So 2-part question.
Yes, well, for both questions, it's a yes, but I'll explain that a little further. With PIX, Brazil is also preparing itself for the next stage of foreign exchange trading and transactions, which tend to become also real time through the standard that was adopted in Brazil, that's being adopted in Europe and in US, the ISO 20022 or something like that. So yes, foreign exchange is important. Brazil is a fairly large remittance market towards US, towards Japan, for instance, towards Europe, and that's in our roadmap as well. And as far as going international with our operation, first we need to acknowledge that the banking business is historically a local one. But having said that, and as I mentioned before, we are an open architecture platform. And from the way we do business, when we find the right local partner in the right country at the right timing, yes, we will be thinking seriously about leveraging additional contribution and growth by going international, where our approach to the challenge of financial inclusion seems plausible.
Thank you so much. So actually, I think this question might be more directed toward Rodrigo, but whoever would like to answer. The question is, with so many fintech firms launching, and especially the past 10 years, do you see Brazil banks coming to the US through partnerships or by buying fintechs?
Wow, that's an interesting question. So, you know, the discussion about internationalization for Brazilian banks into the US it's been out there for many, many years. And I have actually helped some of them with some of these strategies when I was in Brazil before moving to the US 10 years ago or so. And so the Brazilian banks, especially the largest ones, are very solid and very well managed and very creative. So they could come to the US and be successful at any time if they wanted to. It's really a matter of understanding if it makes sense from a return on investment perspective. And to many of them, it doesn't make sense because they have other options with better returns for the investments that they have to do, especially when you take into account the complexity of the competitive environment here and the regulatory environment here. So coming to the US to be a bank of less than $100 billion in assets might not make sense for them. And coming to the US to be a bank of more than $100 billion in assets might put a regulatory burden on them that they might not be completely used to. So that's the trade-off that they have to analyze. So the strategy of acquiring fintechs, it can be an interesting one. And some of them might be already doing that through some of the fintechs that they are launching. So I'll keep an eye on the XPs. I'll keep an eye on the other, unicorn-like fintechs that are in Brazil that have some investors or some of the banks. That might be a part of some movements ahead. But Carlos might also have an opinion, or some of the other panelists might also have a view on that.
Yeah, I think you mentioned the key issues. It's a matter of return on investment, but it's also a matter of if the business model we developed in our region can really make a difference elsewhere. That's the way we take the decision, at least in our case. If we can make a difference, then we're eager to take the challenge. But just to be one more fish in the ocean, it wouldn't make sense even for the large companies that you mentioned that already grew big in Brazil.
Yeah, and I want to take off from the big ocean and how many fish there are. So this question from the audience is directed towards initiatives like PIX and FedNow and real-time payments and any instant payment. As those fintechs are trying to compete and develop on top of those rails, what do you see or think is needed to accelerate adoption so that, you know, more fintech innovations can happen. And that's kind of directed towards our fintechs who are, you know, competing in the market. And then Lolly maybe can follow up with what advice you might have for those fintechs that are launching with new services like instant payments.
So maybe Dan, that might be for you to get started if you are willing to.
Yeah, I mean, I'm going to have less insight than some of the other panelists on Pix specifically, but I think the idea of real-time payment rails being that you can create new products that have things like instant payouts, instant credit availability that people can actually use, potentially for point of sale lending. Those are all really interesting concepts. And I think some of them are only enabled by the new technology. And, you know, I think I'd be interested in hearing like where the Pix experience has had the most impact so far in Brazil, and what areas you think are still open for further innovation. Because as we sit in the US, Plaid, and we operate in, you know, the US, Canada, Europe, and the United Kingdom, we're looking at markets like Brazil and other places in LATAM to say, what is next? What is exciting that hasn't happened yet? I think that's the thing that I'm most interested in learning more about. So I don't know, Carlos, if you have thoughts on that specifically.
Yes, then sorry, I had the mic off. For the moment, what you see is transactions of higher ticket in the Pix system, much higher than the card system, like, you know, 5-6 times higher. And that comes mostly from B2B transactions, replacing the ACH system, and B2C. There's a lot of B2C, but of higher ticket transactions for the time being, which what we see is like, for instance, payment of liberal professionals and things like that. But the merchant acquirers in Brazil are already kicking off their devices that will be able to capture Pix transactions at the point of sale with a very attractive approach to the retailer, with, as I said before, with a lower transactional cost, and with no need to pay for interchange fees to the issuers. So that seems to be one great opportunity. It's already happening, and I believe it's going to grow fast. And the other one, the support for e-commerce transaction. Nearly 70%, 2/3, 70% of the e-commerce transactions are settled by credit cards. And the remaining 30% are really cumbersome because, you know, there are money transfer systems. There's the local Brazilian boletos, the offline money transfer system to support that. That makes, you know, the back office of e-commerce operators very complex. And Pix definitely will make a difference there. So, you know, that will be a second opportunity. That's B2C, that's, you know, e-commerce. By the way, e-commerce has, as anywhere else, because of the pandemics, has been pumped up to the next level in Brazil in recent years. So that's a great opportunity as well. And thirdly, I would mention transactions that transfer money to the government or bill payments or tax collection, things like that. That can be very, very much facilitated by Pix.
I don't know, Lolly, if you have a super quick comment before we close out and I return it to Lucia.
Yeah, no, just quickly, and I know everybody knows this, I'd say that sometimes we have thousands of banks and it feels like thousands of regulations and regulators with that, but I would say just be aware of all the regulations that apply to your particular business model, and to speed up adoption, you know, partnerships always good paths, but also staff up that compliance and legal team. That's all I'll say as regulator. Thank you for having me.
No, fantastic. So I could stay, you know, another 5 hours with this panel. I like to thank you all very, very much. The time flew here, and thank you all for your amazing contributions. And I'll hand it back to Lucia for the closing remarks here today. Thank you all.
Well, thanks everyone. And I indeed agree with Rodrigo. I did not want to interrupt this great discussion, but, you know, we have to come to an end. So as we end this conversation, I would like to thank again the great friends of the Fed, Stephen Kay, Jessica Washington, Lolly Schaefer, Ambassador Carlos de Abreu, Rodrigo Dantas, Carlos Zambetor, Dan Can for the insightful discussion. I'm sure there are several takeaways from this conversation here today. And thank you for joining us today. Once again, it's a great pleasure to host this event with the Federal Reserve Bank of Atlanta. This is such a great partnership, and also for the support that we receive from the Consulate General of Brazil in Atlanta. So if you are doing business in Brazil or plan to do business in the US, don't forget to contact us. Become a member of the Brazilian Chamber. We have a great team of leadership and wonderful members that can help you navigate through the process of bringing your business to the US. Thank you so much for staying with us, and hope that you have enjoyed this webinar as much as I did. Thanks, everyone. Bye-bye.